Hi, this is Kerry Artak with Wicked Stocks, bringing you the daily Tesla report for Tuesday, December 5th, 2023. But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already. Subscribe to the Wicked Stocks YouTube channel. Share the content, if you would, with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever. On with the charts. Let's take a look at the big picture, work our way into the day itself. This is a weekly bar chart showing a meaningful sell signal that did play out a couple of months ago when we settled below this rising channel bottom that is now well above the market at 271.03. At one point, we were anticipating this descending channel bottom at 173.17. And then we put out the late October low, came off of it. When that late October low was placed, we had to create a new trend-defining one-third speed line, which is trend-defining by one measure. And when we came off that October low, we tested the speed line, closed above it. That set up a 3 to 5 week buy signal to channel resistance. That still remains in effect. We are still anticipating this 258.90 to 264.50 long-term resistance area. I think over the next 2 to 3 weeks is likely holding above this simple channel bottom at 233.93. A formation that has contained selling both Friday and Monday can continue to contain selling through the week, and above which over the next 2 to 3 weeks, probably more like 1 to 2 weeks, we should continue on up to our objective at 258.90 to 264.50, this band of descending channel resistance, able to contain buying through January. We could come off of this area in a meaningful way in the days and weeks to follow. And of course, if we were to close above 264.50, that would be a significant buy signal well into the first quarter. I'm not going to go there just yet because I don't want to get too far ahead of us in terms of our day-to-day and week-to-week trading. So if you're a 1 to 2, 2 to 3 week swing trader, no good reason to be short, in my opinion, until or unless we close below 233.93. Until then, you want to be long. Maybe you did reach for 260 or 265 out of the money calls over the last couple of days. That has been the suggested options trade that don't expire. I would go at least a month out. You don't want to see that premium decay to nothing as you approach your target. And inversely, if we were to close below 233.93, then we have a 1 to 2 week sell signal down to 210.20 rising daily. This formation able to absorb selling into January, possibly through January, and from here we could rally back into this band of resistance that is presently between 258.90 and 264.50. So 233.93 is a meaningful pivot point over the 2 to 3 week time frame that is inside the significant 210.20 long-term support and the more significant, actually, 258.90 to 64.50 longer-term resistance. So let's work our way up today because that is the path of least resistance above 233.93. I do have on the way up, I've got 246.35. I don't know if I illustrate 242.76 actually, but 246.35, this former rising channel bottom, still able to contain session strength. It is in reach today above 233.93, and in fact, it is indicated with a push through 242.76 today, 246.35, able to contain daily buying pressures. We might even come off of here for a day or two, but if we were to close above 246.35 today, I think we're several days, 3 to 5 days at the most, from pushing into this band of resistance between 258.90 and 64.50. This is an area that if you bought your 260, 265 out of the money calls, you might have actually done that several weeks ago when we closed above that 206 604 speed line that I showed earlier that you can see again here. You may be holding out for this upper objective, and I think you should hold out for that upper objective so long as we continue holding 233.93. And once again, if we close today above 246.35, I don't think you have to hold that out of the money call or that long position very much longer, possibly by the end of this week, by the end of next week at the very latest, where profits can be taken and short entry assumed. Perhaps you might then reach for some variation of this channel bottom strike, 210 or 215 out of the money puts that don't expire for at least a few months. I would consider a test of 264.50 able to contain buying, let's say, through January. And from there, we could, within 3 to 5 weeks, inside of 2 months, fall back into the 210s, 215s. And so I'm just kind of giving you the heads up right now. Of course, the daily Tesla report will be reminding you of this on a daily basis, of course. Let's talk downside today. If we break or open today below 233.93, 223.41, right about here on the chart, would be in reach on an intraday basis. And if we close today below 233.93, this could be within 3 to 5 days with a high volatility sell-off. It could certainly spill into later next week, 1 to 2 week sell-off to 210.20. So if we close below 233.93 today, you may consider liquidating those 260, 265 out of the money calls you may have purchased several weeks ago. At least you'll get something for them, some degree of profit, I would think. But if we close below 233.93, they're likely to whittle all the way back to break even, if not outright negative. So I would, I see no good reason to be long Tesla, whether it's out of the money calls or the stock itself. If your time frame is between now and say mid to later December, if we close today below 233.93, because over the next 2 weeks or sooner, we should test 210.20, where we could bottom out into possibly through January trade. And yes, if we close below 210.20 over the next couple of weeks, then this descending channel bottom at 175.21 would be considered our next, I think, realistic 2 to 3, 3 to 5 week downside target. But I'm not going to spend much time talking about that because it is, well, it's not going to happen today. And we'll be on this. We'll be covering it, dialing it in for you on a day-to-day basis. So I think that pretty much rounds it out. Please click like, share, subscribe, and check out wickedstocks.com. Take advantage of our 5-day free trial. Got nothing to lose. I'll talk to you soon. You have a great day.